Hey guys, what's up, how's it going? My name is Rob and welcome back for another video. In today's video, I'm going to be giving you guys my weekly update on my Canadian-based dividend stock portfolio. So like usual guys, this will be my weekly update on my Canadian-based dividend portfolio. I got some stocks I'm going to be buying today, so I'll go through and I'll show you guys what stocks I'm buying. I do have some stocks I'm going to be selling. I'm going to be looking to sell towards the end of the month, so we'll go over that quickly as well. And we'll talk about the dividend payments, and I'll give you guys a recap on our dividend income and how much we've been making with the portfolio since we first started. So the first thing we're going to do is we're going to dive inside the portfolio. I'll give you guys an update over the past week how our stocks have been doing, and I'll show you guys where our stocks are currently at. Alright guys, so the first thing we're going to be doing is a quick update on the portfolio. I'll show you guys how our portfolio has been doing. I'll give you guys an update since there's been some interesting things going on in the markets overall. Quite a bit of dips, but a nice little recovery. Looks like we had some gains today, so we'll cover all that in this part of the video. So you have $115,000 in total, $17,000, $263 in the personal account, and $97,000, $569 in the TFSA. We'll start by doing the return of the TFSA and then the personal account, and then I'll actually do a recap or I'll show you guys all my stocks and whatnot, since I haven't done that for a little while. So the first day, since today we are up 1%, which is about $800 in the TFSA. So like I mentioned, nice little jump up today since this morning, since I last checked. It is now 2 p.m. at the time of doing this video. Over the past week, we are about neutral, more or less. Over the past month, we are down at negative 0%. So quite a big dip throughout last month happening in the stock market overall. And I think a lot of people have seen that inside their portfolio. Over the past 3 months, we are still up 2,531, which is 3%. So nonetheless, over time, even with dips, the portfolio is still growing, which is always good things. And we are getting those payments on a regular basis, like the dividend payments, which also helps as well. Over the past year, we're up 11%, which is just under $10,000. And then all time inside the TFSA, we're up 15%, which is $13,000. So even though we've had a bit of a dip recently, once again, it's long term. We're going to be getting that income. And whenever dips happen, there's always a rebound. So we're going to keep investing our money, keep putting it in so that when the rebounds do happen, we can benefit from that. If we go over to the personal account, it's more or less the same. The past month has been negative 0%. Today, we are currently sitting at 0. And the reason why the personal account isn't as high as the TFSA is because we do hold a lot more Canadian stocks. And I think most of the rebound came from the American stocks. And then all time inside the personal account, we are up 11%. So pretty consistent growth inside of our personal account, which is a little bit more Canadian stock focused than the TFSA, which is a little bit more 50-50 between US stocks and Canadian stocks. And just really quickly, guys, I want to mention really quickly that if you guys want to sign up for Wealthsimple Trade, there's a link in the description of this video. If you guys install the app and punch in the code here in the description of this video, F14M1W, you guys will get a free stock that you guys can invest, and I'll get a free stock as well. So thank you guys very much, and you guys can take advantage of that if you guys want. So the first thing in terms of the stocks I'm buying today, we're going to focus on the personal account today. We have $269 inside the personal account we're going to be using to buy some stocks today, and we're going to be buying like usual, we'll focus on our covered call ETF since we're looking to build up our passive income, and it will give you guys an update on our total dividends for this month as well as the entire portfolio towards the end of the video. So we will be putting a little bit of money towards HYLD. I'll put about $100 in HYLD, which is going to be about, I would say, 6 shares. So that's just under $100 Canadian. We'll buy HYLD. We'll put that through inside our personal account since, once again, we're looking to expand our position in some of those covered call ETFs to increase the yield of our portfolio just a little bit. And the other stock I'm going to be focusing on today is going to be one that I'm a big fan of, but I haven't bought recently and I don't have a huge holding inside my portfolio. And that is going to be CNR stock. Now, I actually don't hold CNR stock inside my personal account. I do have it inside my TFSA, which I will give you guys an update towards the end of the video. But we're going to be adding here inside my personal account because it makes sense. It's a Canadian stock. It's a good quality dividend stock. If you look at the dividend history of CNR stock, it's got tons of growth and stock appreciation. It's the railways are, when it comes to like our economic background and our supplies and whatnot, like it really is the backbone of this country, and we've seen that there is a huge demand for supplies right now. So I think companies like even CP are going to do well going into the future, but I personally am a fan of CNR. I think CP is good as well, but from a dividend perspective, we see a yield of about 1.83%. So it's not a high yield, but it's also pretty conservative. Payout ratio is relatively low as well, and we've seen some pretty big dividend hikes over the past little while. 20% dividend hike for this year alone. So it's a good growth-based dividend stock. So I'll go inside my Wealthsimple Trade account, and since we're going to be adding this new one inside of a personal account, we can go up here, we can search for CNR, going to pop up here, and make sure we have Canadian National Railway on the TSX. That's the one we want, and we're going to be buying a share of that if we can afford it. It is $159 Canadian right now, so buy one share of that. We'll put that through. And just to give you guys a quick little update on CNR stock inside my TFSA, we are currently sitting at about 4 shares inside my TFSA, and it is up 14%. So it is a pretty good growth inside my TFSA as well. But that's going to be the stocks I'm buying in today's video. But the other thing I wanted to focus on is some stocks I'm going to be potentially selling in the future. And I've been thinking about this for a while because I had to take some money out to pay for some of my taxes. So it was a big debate myself personally, and I didn't think too much into this in terms of whether I wanted to take it out of the personal account or the TFSA. Part of me thinks that because if I take it out of the TFSA, it won't be taxed, and then I can just recontribute it next year. That'll probably be the best way to do it. But I don't think it really matters, really, at the end of the day. I think you could take it from your personal account, your TFSA. Maybe somebody with some more tax history could maybe give a better answer, but I don't think it really matters in the grand scheme of things. We're going to go from our TFSA just so I don't have to pay capital gains on it next year, and then at the start of next year, we can recontribute it. And the other issue I was having is what stocks I want to sell inside my TFSA. Now, whenever you're selling stocks, typically it's always best to sell at a high and not a low. So that makes sense. So if we're looking at my TFSA, we can see our different returns on our different stocks. And I'll give you guys an update on some of the stocks as well. So AQN is probably our lowest performing stock at -4%. So we don't want to sell that one because, you know, we'd get a loss. That's obviously not good. ATD is one of my favorite stocks. It is up quite a bit. I don't want to sell it because I love the company and I think it'll do well. Here we can see CNR, which we bought earlier. Fortis is another good quality stock. We have HYLD. RioCan is actually the one I'm going to be thinking about selling. And the reason why is because the REITs, although REITs are good, they have good yield. It's a different sector. We can diversify. But REITs typically, I don't think I really like them as much in my dividend-based growth portfolio. Because for me, typically speaking, and it's different between different REITs. The REITs have not performed well, and we don't see much growth inside of them, at least not the RioCan. And I bought RioCan way back in the beginning of the pandemic. We'll do a quick little history lesson for you guys. Back during the pandemic, real estate basically got shut down. You know, people weren't working, everything got shut down. So like basically everything crashed, and the REITs went down a lot. We've seen some pretty big dip. We went from $30 Canadian for RioCan all the way down to like $15 or so. So I bought a bunch of shares, I invested it, and we've seen a little bit of an increase. And we're currently sitting at a gain of 24%, which seems pretty good. But the reality is, if I would have put that into a stock like TD or something, or some kind of more, you know, a little bit more consistent, you know, stock that has good stock appreciation with stock growth, we would have seen a better return. So what I think I'm going to do with my RioCan is I'm going to be selling a good chunk of my RioCan to pay for my taxes, and I'll probably do that later on this week sometime. So I think that's where I've come to conclusion. I want to get this out of my portfolio. I had a nice gain on it. I'm going to take that gain of $970, that $1,000 that I got, can put that towards my taxes. And what we're going to do is we're going to take the rest of the money and put it into some of these more dividend growth stocks that I think just have a better history of growing over time. And again, RioCan, don't forget, RioCan did slash its dividend. I think it was it shortly after the pandemic. So, you know, we want those consistent stocks. We want those stocks to have a good history. So I think REITs are great, but once again, I want to kind of focus more on the dividend growth stocks inside my portfolio. So let me know what you guys think about that. But I think I'm going to be selling RioCan in the future. And of course, the best part of the video where we talk about dividend payments. We got a lot of dividend payments coming through. I can't remember if I did an update on all the recent ones. So like I usually do, I'll just do an update on everything for April. So lots of dividend payments coming in April. It actually is a pretty big month in terms of dividends. So in April 14th, we got dividends from Algonquin Power and Utilities, one of my favorite companies. Even though the company isn't performing the best inside the TFSA, I still think it's a solid company. We should see the rebound. HYLD finally paid us our dividends that we got. That's is representing our, I think it's about 9 to 10% yield that it gives. So we got two dividend payments from HYLD. We got a nice dividend payment from VDY, Severia Corp, another one from VDY. Here's the RioCan dividend payment. So it does have a good yield, but once again, I want to focus more on growth and dividend growth in the long term. And then we have ATD gave us their small dividend, C&Q gave us a dividend, VFE, and then TELUS gave us some nice dividends too as well. So pretty good month overall. And I'll give you guys a quick update before we end this video on the monthly dividend income that the portfolio has been generating since we first started investing with it. So here's the dividend income over time. Obviously in the beginning it was pretty small, and I always show this update so you guys can see how the portfolio is growing over time. I did update for it for April, so if you scroll down to the bottom here, we can see the current dividend payments. April is currently sitting at $332 in dividends, so quite a big jump up from March. Once again, a lot of our big ETFs paid out, so that's why we have such a big dividend payment. But one of the reasons why I'm focusing a little bit more on the covered calls side of the portfolio is I just want to get that consistent dividend income, because for me, you know, $300 a month is quite a bit of money. And as you guys watch my videos in the past, I do focus on kind of like, you know, frugal living, kind of making appreciating money for what it is and using it to buy those small things, like maybe using it to pay for your rent, your groceries, different things like that, different fun things and whatnot. So you know, $300 can go a long ways, and it's only going to grow over time. So pretty good consistent growth there, and I'm pretty excited about this. I think we still have another big dividend from TD, one of my favorite stocks, towards the end of the month, and I'm not too sure if there's anything else that I have to double check. But here's the graph just to once again show you guys how the dividend payments have been growing over time. So once again, whenever you feel a little bit, you know, like you just feel like you've hit a plateau, or you're not excited about your portfolio, or you get lost, or you feel like, you know, sometimes with inflation and everything, it can feel like money, you know, you're not getting there as quickly as you'd like. It's important to track things. It's important to look at your past history. And we can see here, if I reflect on this, we can see consistent growth. And I always feel better whenever I kind of review this, because I can get a good idea that this is going to keep growing in the future. So once again, the 28th month, which is what we're on for the month of April, we're sitting up there almost at all-time highs. So maybe within the next couple months, we can kind of get up there. Maybe we'll even hit the $400 dividend month mark. I don't know. We'll have to wait and see. But once again, this always inspires me, and I hope it inspires you guys as well. And I did buy a few things with my dividends this week. I wanted to get a new CD. Now, you guys might have heard of Matchbox 20. As you guys can tell, I grew up in the 90s. This was a pretty popular band, and they had some pretty good hits. So I looked up which one of their best CDs were, because I wanted to listen to something different. And a lot of people recommended this CD. Had pretty good reviews, and it's really, really good CD. I really enjoyed it. I kind of listened to it today as I was doing my editing for this video, and it was a lot of fun. It was cool to listen to an old school album, and you can tell it's from the 90s, but it's good stuff. And I really much enjoyed it. So I bought that with my dividend income. And the other thing I bought was a puzzle. I got a nice little puzzle here for me and the girlfriend to do. Here's Chloe to say, kind of wants to come and say hi like usual. I got this, probably a kid's puzzle. It's pretty easy. We're not really good at puzzles, but I want to get something that was easy to do. Something different. We like to do different activities and whatnot. And this was, I think, about like $8 on Amazon. So, you know, it's a nice little picture or something. Maybe we'll glue it together and frame it or something. I don't know. But it's just something for us to do that was nice and cheap. So we got a nice little puzzle for us to do as well. And once again, I am kind of like pretending to buy this stuff with my dividend income. Alright guys, that's it for today's video. So like usual, let me know what you guys think in the comment section. If you guys did enjoy the video, please sure to give the video a big thumbs up. I'll see you guys later. Hope you guys have yourself a good week, and take care.